Hey guys, hope you guys had a good week this week. So last night I was talking about how I expected this unemployment rate to be a pretty big mover pre-market. I wasn't sure if we'd go green or red though, but we ended up having about a 1.3% red open, right on par for the 1.2% for the previous two. So we have a lot going on today, and we're going to kind of talk through a lot. This video is going to be a little different. We're going to talk and more focus on actually SPY and nothing else right now. We're going to just kind of talk through kind of where we're at and what happened. So the first thing I want to talk about here is that we opened below 405.2, 405.3. I usually say 405.3 is my support here. The big thing that we're watching here is that we broke under it. We found the daily AEMA, and most importantly, we found 402.2 support, which just as you can see that trend line that we had been rejecting. So previous resistance was just reconfirmed as actually support. So with that, when we bounced back up here, we fought at this 405.3, 405.4 area for quite a long time before we finally broke through and closed up here. So my thoughts were this going into the day and really pretty much all day. If we had closed over 405.3, I'm looking for upside, maybe 419.5 next week. If we closed under 405.3, then I was looking for downside next week. So you see these arrows right here. So interestingly enough, next week, which people might forget just because I think they're focused on CPI and forgetting about FOMC, next week is actually pre-FOMC week. So that means that it's the week before FOMC happens. Historically speaking, 5 out of the 7 pre-FOMC weeks have been red, and their average drop is 4.14%. That means from today's closed, if we drop 4.14%, that puts us exactly at 390.1. And look where 390.1 is. That is right here on this channel support. This is the support that the resistance that's now support that we were rejecting before last CPI and FOMC or CPI. That means we could end up breaking down through this big rising wedge and end up in this area. However, 2 of the 7 FOMCs have been green, and they're averaging about 3.26%. If you take today's close and add on 3.26%, where do you get? You get 419.9. And look where resistance is, 419.5. So that means to me, we are going to test one of these levels next week. This almost, and I just don't know how I just don't know how big of a move and how fast of a move it'll be, if it'll be would be worth doing it on Monday, opening it up, depending on where we open at. But almost a straddle, like with a Friday DTE, could be worthwhile. I think we do touch one of these levels next week. Now, the last FOMC is when we did open green, and the only other pre-FOMC week that was green was in July. So there's really no way to know for sure. So interesting enough, the July FOMC was down in this range. So I'm going to add back on what I was looking at here. Let's see if it gets back here. Okay, so now let's talk about where we're at. So if we take this green resistance line right here and we plot each point, besides the August point, which is just below it, we have 1, 2, 3 touches on this resistance line if we include Thursday's candle. That's a pretty strong resistance line. Technically 4 if you include this soft touch because it just fell just short of it. So this is obviously our trend line, and that trend line for Monday is going to be right here. Let me just delete this real quick. I want to have these up here to show you guys later, but they kind of get in the way sometimes. 409.5 on Monday is the resistance line for the bear channel. If we broke through that, then I'm saying that we are definitely going to go up. However, if Monday we break back under 405.3, then I am eyeing the 390 level. So now one thing I want to talk about is the cycles we're in. So let's look at these cycles. So we had the March top to the June bottom. As you can see here, was about 21.6% drop over 79 days. And then we had a rally, which was 19.2% over 60 days. And then we had a 19.3% drop over 57 days. And then what do we have? Currently, using Thursday's peak, we are at a 50-day rally of 17%. I'm just scrolling through my document to get to my numbers real quick here. So, on average, our rallies have been 60 days and 19.2%. Using the two current rallies we have right here from the bottom to the peak. So we're right on par. We're there. And historically, bear market rallies are about 20%. So we do have a little bit more upside. That 3% that I was talking about for FOMC would put us about 420, and that would get us about our 20%. Obviously, that breaks the trend, but it doesn't break major resistances. Really, until we break over 430, we're not really establishing too much, and the next big level after that is this 458 level. So looking at the drops, if we think this is peak and we think this week we're going to come down leading into FOMC and then we're expecting a miss on FOMC, we could be looking at about this. If we use the average days and percent drop for the last two big drops, we're looking at about a 20.5% drop over 68 days, which gets us about to 326 area on February 7th. Now, obviously, it's plus or minus. You can see we hit the 25th percentile right about here. So we could be looking about 334. 330s is a big number a lot of people throw out there. And we also could be looking even lower. I have this trend line right here, this red support line. This is a big one that goes back to the February 2016 low and then the 2018 low and uses it as a trend line for potential support. If we follow that and we do break down, we could be looking for about by March 310 to bounce. That could be a potential bounce area. You can see as we could go up and then back down, or we could go up and break out. So there's a lot of things going on right now. So one thing I want to talk about is why we will drop or won't drop. So let's think about it. If you bought down here, you thinking, wow, we're up, 20% from where I bought. I was awesome. But now you're thinking, well, what? We're at the bear market resistance here. Why won't we go up another 20% to 446 or something like that? Why don't I hold? And you know what? They might be right. You're right at the resistance line. There's a good chance it keeps going. So that this person that bought down here, they're not going to sell. They have no reason to sell. And then you have the person up here that bought back at 450, 480. They're thinking, wow, we went to 340 and I was looking really rough, down like 25% or whatever it was down there. And you know what? I'm only down like 20% or something like that now. Why would I sell now? They might come back up to 440, 430. Maybe I can sell up there and get a better sell. They're not going to sell. So I've been saying this whole market, and even dating back to here with the Jackson hole and this August top, market needed a reason to sell. So this was perfect case of that. We came down just off a natural pop. We had something to happen on these 2 days right here, and I really just can't remember. There was something to happen on this Friday and this Monday to cause this massive drop, and I honestly can't remember. I need to go back and look someday and refresh my memory. But we had Jackson hole that started the sell-off, and then we just kind of slow chopped. And then this was the run-up into CPI in September, massive drop. Came down here, kind of chopped, and then FOMC dropped us more. We put the bottom in, we bounced, came down here because of CPI in October, and then we had that CPI rally. So now we've been in this rally mode, which this looks just like, pretty much, you can see this is the peak right here. We came up, this is the bottom. If you get rid of this candle, it looks even more like it. And then we kind of go up, and that's pretty much where we're at right here. We had less dramatic of drops, but we're pretty much in the same sort of movement right here. So the question is, what will cause us to go down? There has to be an event or something to make people want to sell. And that's how this market works. And I think that's what a lot of people, and even me included, back in this June, July to August rally, that really got burned because we were thinking, you know what? The data sucks, everything's bad, bearish. There's no bull scenario, but there was not a good enough reason to sell again. We were so oversold at this point, and the VIX was so high, there was no reason to sell. And we rallied because everybody wanted to buy, and everybody was buying into that pivot narrative. And that's kind of what happened back here too. We just kind of hit such an oversold and such historically low for the time period lows that there was no reason to keep selling. And everybody's like, I'm going to buy at 350. That's a great buy. And everybody's like, well, we're going to pivot maybe. I'm going to buy. And then CPI came in good. I'm going to buy again. And then now Jay Powell is saying that we might slow rate hikes. So the scenario I'm looking for to take us from currently 406.9 down here into the 320s, that is going to have to be CPI and FOMC. And it could start next week. I'm going to talk about some numbers here. And this is only going off Cleveland Fed. So mind you, the consensus, which should come out next week, will be more accurate and I can get a better prediction of where we might go. But as of right now, based off the Cleveland Fed numbers, the best case scenario for CPI is year over year 7.3%, which would be the sixth beat in a row. Month over month CPI 0.4 unchanged. Core year over year 6%. That's a big beat. Core month over month 0.3% unchanged. So best case scenario is both year over years beat and big beats, and month over month is unchanged. Those also could be beats depending on the variation. Usually 0.2% is the variation. Now, worst case scenario is 7.7% year over year, which is unchanged. That'll be the first time in 6 readings that we had an unchanged or did not have a decrease of year over year. That would be a big thing for the markets to take in. Month over month, worst case is 0.8%, which is a massive miss. Course year over year, 6.4% slight miss. And month over month, 0.7% big miss. So the worst case scenario, so the way the variations that I have realized is that they're either 0.2% high. So what I mean is like they predict it's going to be 7.5%, but actually comes in at 7.3%. Or they're 0.2% low. So they say, oh, it's going to be 7.5%, but it actually comes in at 7.7%. So that's how I get my variations. So based on that scenario, if the markets start looking at these numbers and consensus starts coming out next week towards like probably Wednesday or Thursday is when they usually drop it, we could get a pretty big reaction to that if those numbers are not very favorable and that variation does not favor a big beat. I'm going to be watching closely, but what I'm thinking, my 2 scenarios here, I'm going to zoom out so we can talk about this a little bit easier here. I'm going to go ahead and delete these now just to clean my chart up a little bit here. So best case scenario here is 419.5 end of week. Worst case 390.1. If CPI misses big, we're going to have probably a big old 4 to 5% red day. We're going to end up in this range down here in the 370s, and then it's going to be up to Jay Powell. Right now, there's a 78% chance that we get a 50 basis point hike and a 21% chance, 22% chance that we get a 75 basis point hike. Market is not priced in a 75 basis point hike at all. And I guess by when I say chance, I mean the price in ability of it. If we get a big miss on CPI, we're going to dump hard. And it's going to be a quick turnaround because markets are not going to have the week or 2 weeks they usually have before FOMC to price in the 75 basis point hike potential. So then we're going to go into FOMC literally the next day and most likely open pretty red as markets are going to be scared Jay Powell is going to drop the 75 basis point hammer if we get a big miss on CPI, especially core and especially month over month. So then either Jay Powell says, okay, we're going to get a 50 basis point hike, and then it matters. If he says, and next meeting we're going to go to 25 basis point hike, we're going to rally hard. If he says 50 basis point hike, but next meeting 50 basis point hike again, most likely, we're going to dump even harder, and that's where we're going to get that 325, 330 level. That's when it's going to come. If he says 75 basis point hike, and then hints at either 50 or 25, doesn't really matter at that point, probably would go to the 50 is my guess, then it's the same thing we're going to dump. However, if CPI comes in very favorable and we get another beat and they can start actually saying that inflation maybe has peaked, that's where we're going to get another big 3-4% green day on CPI. And then markets are going to be going to price in a 50 basis point hike almost guaranteed. And I would be surprised to not see us open pretty green on FOMC day. And for Jay Powell, most likely then would go with a 50 basis point hike. And he would probably consider hitting at a 25 basis point hike. Though that's the best bull case scenario. And that's the type of where we're going to get a big old Santa rally. And we're going to end up in this, 430 to 440 range is my opinion. So the next week to 2 weeks is going to be big in this market, and I really think that maybe next week could be choppy, and we might just end up in this 410 range still, 405 range still. But the week after that with CPI and FOMC, that's going to determine, in my opinion, the next 2 to 3 months. So that's kind of where I'm at. Now, going over here to the weekly real quick here, getting off the data and just strictly looking at technicals now, you can see we're still in the bull channel here. We did hit the resistance, so we have 1, 2, 3 actual touches here, and then we have a 4th soft touch right there. So you can see we got the channel, short peak, channel, short peak, channel, short peak, channel. So that means we should come down here and we should put in a short peak somewhere around here before we go all the way down. The biggest thing I'm seeing here is we have this really big level right here at 409, and we did not close over that. We wicked over it, we rejected the channel, and we came back down. Next week, that 408.6 level, which is where the channel actually ends at, is pretty much where the bear market resistance line is. So we very well could reject right here at 408.6 and then move that down here and start looking for that 390 support. However, if we break through 408.6 and really 409 and start getting up in here next week, the 410s, then that really does open us up when I was talking about kind of getting up in this 410 to 420 range. It's kind of what I'm watching. Now, the last piece of the puzzle is the VIX. The VIX had a massive breakdown. We closed the lowest level we've closed since April 5th. Now, if you go back to April 5th, let's see, April 5th. Oh, that's August, sorry. April 5th was right here. So it's actually after the peak. So kind of like what we have here. So if we zoom out so we can see both at the same time here. It'll be a little hard to see because it'll be small. Let me get rid of these for you guys here. So here in March and April, you can see we put the peak in, and then we came down and we back tested. We put the peak in, we came down, and we back tested. Now, same thing with the VIX there, same thing. The VIX, the peak of the VIX was right here on March 29th. That was the bottom, and we could be looking at the same thing here. We had the VIX peak, or the market peak, and the VIX didn't peak to a couple days later. So, as I was saying before, every peak of this rally, which is highlighted by here, 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 and then potentially here now, has happened after 19.7 was broken. So this level being broken, this is what in my opinion, this is put loading zone. I don't see a reason not to start eyeing into like a 60, probably 90 DTE position to be safe. Put and maybe just start with like 10 to 20%, maybe 25%, and just slowly add to it. I would say if CPI comes in good, I would go ahead and cut that position. However, if CPI misses, then that's gonna pay out pretty well. So that's kind of what I'm thinking right now, and that's kind of where I'm at. Next week is gonna be interesting. We're gonna, like I said, we're gonna probably have unfortunately a lot of the same consolidation and just kind of choppy crap we had right here. I am eyeing a scenario like back here in September where we just had a massive rally. I mean, this was what, 1, 2, 3, 4-day rally going into CPI only for us to get absolutely slaughtered. So there's a potential we could repeat something like this and have a big breakout. And I wouldn't even be surprised, honestly, if we had some sort of fake breakout and we ended up in this range and we just kind of established a new resistance line. It wouldn't surprise me. And even like we could probably maybe even try to predict it. Let's see if we can be accurate here. So we'll go down to the peak right here, and then we'll go to that peak. Let's see here. See where we might end up. could even, yeah, maybe 440s could be in that potential. So, you know, it might be maybe 430s depending on where we go over the next month. So just going to be interesting. Just going to watch over the next couple of days here, and probably won't play a lot of swings the next couple of days, or this next week, just because the market has been really irrational, and I just don't want to get burnt on anything overnight. The payouts intraday, especially today, have not been very good, so I don't want to burn up capital overnight and have to make it up all day. So, all right, I hope you guys had a good week trading, and I hope you guys have a good weekend, and I'll see you guys next week. Thanks for tuning to this video, guys. I hope you guys enjoyed it. Don't forget to hit that subscribe button to stay updated to my videos. This is the Lifetime Discord link. If that does not work, go ahead and drop me a comment or send me a message and I'll get you a new one. On the Discord, I do pre-market update with key supports and resistance from overnight. I also do live analysis and commentary throughout the day on SPY and Tesla. And I also do my live alerts for callouts for plays that you guys see in my daily log. You can follow me on YouTube, Twitter, Instagram, TikTok, and Reddit under Daddy Dersh.